What's going on, everybody? It's Stas here. Welcome back to another video. So what a freaking day we had in the stock market today. Oh my goodness, guys. We got to break that down in this video. We have to also break down some earnings, different stocks I'm looking at, and chart setups that I like right now. So before we do, make sure to get your free money from Moomoo. You get one free share of NEO, and on top of that, you get up to 5 stocks, each of which could be valued up to $3,500. All you have to do is use my link, deposit at least $100, and boom, you get your free money. And with that being said, let's get right into the video, guys. Starting off with what happened overall in the markets. We had the S&P 500 close up 1.2%, Dow pretty much the same, up 1.2%, NASDAQ up 1.16%, and we had the Russell up 1.7%, VIX went down 4%, and we had gold and silver. Let's see here. We had silver up 3.16% on the day. Shout out to Stone Cold Steve Austin. We had gold up 1.5%. So pretty awesome day all across the board. We had the metals up, volatility went down a bit. We had fear relax in the markets, kind of, with the VIX coming down a bit, and we had equities, all the indexes up a good chunk today. And based on what I'm seeing here on SPY, when it comes to this 20-day 1-hour chart, we're noticing a full-on breakout. We're noticing a golden cross here. The 50 SMA is crossing above the 180 SMA. We also took out the highs from last week, and now we're playing with the highs from the end of February, early March, being around 440 to about 441, and that's where SPY closed, literally just a little bit above $441 per share. So if we take those highs out from about 2-3 weeks ago, this is going to go straight to 448, which we talked about recently. If you take a look here on the 4-hour chart, the next gap is 448, followed by about 458, and it seems like we're gaining steam towards those levels. So I'm going to put my alert at 442. Let's see if we break out. Oh, actually 442.50. Let's see if we break 442.50 tomorrow. And look at the close that we saw today, guys. Crazy close. I mean, we saw the markets look very strong all day today, but look at what happened in the latter half of the day, and more in particular, the last 1 hour of the day. You guys can see power hour. We were at 438.40. Then this thing ended up ripping 0.6% in the last 40-50 minutes of the day. So very strong day overall in the markets. If we pull up QQQ, it's pretty much the same thing. QQQ ran all day. Nice push into market close. We're noticing on the 20-day chart, it is starting to gain some steam. We're noticing a golden cross on triple Q here. 50 is crossing above the 180 SMA on the 20-day chart. We took out the highs from last week, and now we're slowly starting. We're not fully out of the woods yet, guys. We're not, but we're slowly starting to break out of the 180 SMA, and the downtrend here on the 4-hour chart, the longer time frame, which shows you triple Q's been selling off since November, December, and we've talked about that here on the YouTube channel countless of times. So markets are looking great. SPY's a little bit further ahead in terms of breaking out than triple Q, but overall, we can't complain considering the markets have been very red. Now we're finally starting to get some green. So what do you guys think? Drop me a comment down below. Make sure to hit the like button and subscribe. And don't forget to get your free money from Moomoo. You get one free share of NEO and up to 5 other stocks. Use that link down below. Deposit at least $100 and boom, you get a bunch of free stocks from Moomoo. And now let's talk about some of these earnings. Number one is FedEx. And mind you, you guys know this. Whenever we have earnings, for the most part, I don't like looking at the earnings before the video so I can get a bit of a surprise. So FedEx reported today. The stock went up 0.9% on the day. And let's see what it's doing here after market hours. So we closed at 227 and shot up to 237, down to 218. Now we're pretty much at 227, break even here after market hours. So let me pull up the live news tab and see what's going on. They did $4.59 EPS versus $4.64 estimated. Sales came in at $23.6 billion versus $23.44 billion estimated. So they missed EPS. They barely beat sales. I guess a pretty decent beat in sales. And they see full year 22 adjusted EPS of $20 to $21 versus the 20.6. Actually, it was $20.50 to $21.50 versus the 20.6 estimate. So that's a beat on full year 22 adjusted EPS guidance. And let's see here. Do we have revenue guidance? 23.6 billion versus, no, that was for the previous quarter. I'm not seeing anything on revenue guidance for the upcoming quarter or for the year in general, but overall, not too bad of a report. I would say EPS guidance looks pretty good, and the stock, again, is pretty much unchanged. It's down a little bit, maybe $1, $1.20, which is nothing for a $227 stock. So overall, I'm looking at FedEx on this 4-hour chart to break out of 230. I'm not touching it until it breaks 230, and quite frankly, probably 235. I'm not going to touch it until it breaks 235, so I'm going to put my alert right now, and this is actually a stock I owned. You guys in my Patreon know that I used to own this. I sold out of it. I made about 10%, raised some cash, and now it's under where I owned it, which is great. I ended up lucking out on it. I timed it nicely, made my money, I got out. Now I'm just watching it on the sidelines for a potential re-entry. So that's FedEx, ticker symbol FDX. We also had GameStop report today, GME. So let's pop up GameStop. This stock went up 0.1, or actually almost 1%, not 0.1, 1%. It went up 1% on the day, closed at $87.70. And now after hours, this is not looking good, guys, it's under $80. So that means it is down over $8 a share after market hours. Let's see what the heck is going on. And it looks like it went down even more. It went down to $75, so it dropped $12 after hours initially, saw a bit of a spike back up. Now we're sitting at 79, again down about $8 a share. So let's see what GameStop ended up doing. They did $1.94 in the red of EPS for Q4. That is down from the $1.19 a year ago. So they actually had a profit a year ago, and they just reported a massive loss. And sales came in at $2.25 billion versus $2.22 billion. So they did beat sales, but EPS, they're bleeding money, guys. And I'm not sure what the estimate was, but overall, year over year, they are down. That's not the best sign. I know they are trying to turn things around. They're putting money where money needs to be put for them to turn things around. So they're losing some money right now. But overall, the stock is not looking good on a percentage basis. It is down close to 10% here after market hours. And you guys know the trend here. You know, it's very similar to FedEx. I mean, it's arguably way worse than FedEx. You know, FedEx is trying to break out. It's in a downtrend, right? Like we just saw, it's been in a downtrend for months, and it's been going down very slowly, but surely it's been going down. GameStop has also been going down at a way more rapid rate, and a lot more of its value has been lost than FedEx. I mean, it makes sense considering FedEx is a legit, I don't want to say GameStop's not a legitimate company, but FedEx is more stable, GameStop way more risky. So it makes sense why it's going down a lot more. The stock's down about 70% from the recent 255 high, which was just back in November, guys. It's not like that was a long, very long time ago. It was just 4 months ago where this stock was at 255. Now it's under 80 or right around $80 a share. Not looking good. We're also getting a death cross here, so I would be very careful until this thing broke out of the moving averages, which would have to be anywhere from 110 to 115. So I'm going to be watching GameStop. Dow is another one. Dow Inc. here, which is up. Today it went up 5.3%. It's a pretty nice day. And what we're noticing on the 4-hour chart is an inverse head and shoulders. We have the left shoulder head, right shoulder. We're also noticing within the right shoulder an ascending triangle. So that's the beauty of charting and having different lines, ovals, whatever, and trying to really see what's going on. You're going to notice different things in different parts of the chart and things within different parts of the chart, if that makes any sense, right? In this case, again, we have an inverse head and shoulders, and then we have the ascending triangle on the right shoulder. You guys can see, if I zoom in a bit here, we've been uptrending since the end of January. Higher lows, a couple of them have been made, and we have resistance at about $63, which is what we're fighting with right now. So I think if Dow breaks 63 a share, there's going to be a wide open gap to about 66 a share, which is the high point from the end of August here, and that would give it around 4 or 5% upside, and the right shoulder would complete, and the ascending triangle would end up playing out. That's kind of what I think is going to happen. It's not for sure going to happen, but the way things are lining up, the way the charts are looking, that is what I'm thinking is going to happen. So I'm going to put my alert at $63 here on ticker symbol DOW, and we'll be watching it moving forward tomorrow, the next couple of days. So that's, what is that? Stock number 3? Yeah, that's stock number 3. So stock number 4 is CrowdStrike, ticker symbol CRWD. Let's pop it up and see what's going on. CrowdStrike today went up 7.6%, and this is pretty interesting. Kind of similar. Well, we're not seeing an inverse head and shoulders per se on CrowdStrike, but we are noticing an ascending triangle, kind of like what we saw with Dow just recently, the previous stock, right? We're noticing an ascending triangle on this 4-hour chart, more in particular over the past 2-3 weeks. You know, we've seen clear resistance at about 205, and we closed right under 205 today, and I think we hit it earlier in the day. If you guys look on the intraday chart, we hit 205 at about 2 p.m., and then the last 2 hours of the day, we struggled at 205. So that's a big resistance from the past couple of weeks. And if you guys also look here, since the 8th of March on this 4-hour chart, we've been making higher lows. So we're digging ourselves deeper into the triangle. If we take out 205, the next gap coming is 218, which was the high point from the end of 2021 into the early days of 22. And if 218 breaks, wide open gap to 235, 240. And they just reported pretty good numbers not too long ago, a couple of days ago. So maybe we're going to get the momentum that I believe this stock deserves at this point. I'm not saying it needs to go back to $300 a share, but low 200s, mid 200s, I definitely think it could be going there. So that's CrowdStrike. Another one that I'm looking at here is Halliburton, however you want to call it, guys. This chart looks pretty good. Today it went up 5.5%, clearly uptrending over the past couple of months. We're noticing a golden cross. It's riding the moving averages. In fact, today alone, it bounced off the 180 moving average, and it broke above and closed above the 50 moving average. Now, this to me, guys, looks like a continuation play. It looks like the uptrend's continuing. We found a bottom, and we're breaking out. Now, pretty much, I'm looking at this to see, okay, is this going to break out to all-time highs again, or at least the recent highs? I'm not sure if those are all-time highs. Let me double check. Nope, all-time highs were hit back in 2014 for this stock. Then it fell all the way to $4. Now we're back to the mid-30s. So, yeah, focus on, I would say, $36 as resistance in the short term, or not even necessarily as resistance, but as a level that it needs to break for the momentum to continue. So I'm going to put my alert at 36, maybe 36.50, considering 36.50 was resistance a couple of days ago. So I'm going to do that. If we break 36.50, I do believe this stock could test the lows from a couple of days ago. Now, will it break out and go to $40? Sure, it could, but I'm not necessarily saying 100% it's going to do that. We have to always be mindful of that in the stock market. Nothing is 100% guaranteed in life. In life in general, nothing is guaranteed. So that, I mean, it works in the stock. It's the same thing for the stock market, right? So watch out for HAL. PBCT is another one that I'm looking at right now. This is People's United Financial. This is at a very interesting spot where I think we might break out, because we've seen something very similar happen in the past where we consolidated for a good couple of weeks, and then we saw a huge leg up breakout, kind of what is playing out right now. So notice how, well, not yet. I mean, I think it could play out in the next couple of weeks or next couple of days. So what we're noticing on the 4-hour chart here is PBCT back in September, pretty much from September to the end of the year 2021, 3 months. You know, it was in this wedge. It was kind of beating around the bush between $16, $18, $19, and then it broke out heading into the new year. We got that huge leg up. We just completely broke out of 19, $20. We hit almost 22, and now we're noticing the same thing since the beginning of 2022 up until now, about a little bit over 2 months. We've been consolidating. We've been bouncing around 20, 19, 20, 21, $22, and now today we had a red day, but we ended up breaking out. That might have been yesterday towards the top of the wedge. That was this morning. We got rejected, but I still think there's a chance it could test the top of the wedge again and completely break out and see a repeat of what happened earlier in 2022. And maybe I'm getting ahead of myself considering the stock has ran up so much, but I'm just looking at the charts, guys. I'm just looking at the charts and kind of thinking out loud here. If this does break $22, where I'm going to put my alert, I mean, it could run 23, 23.50, definitely possible. So I'm putting my alert at 22. And to end off this video, let's take a look at XLE, which today went up 3%. 3.4%. And let's talk a little bit about what's going on with these oil charts, some energy stocks. So XLE went up 3.4% today, clearly bouncing off of the 180 SMA on the 4-hour chart, being around 71 bucks a share. Today we closed almost at 74 bucks a share. So this looks like it wants to continue the rally. Now all we have to do is break that 50 SMA, which is at 75 bucks. I'll put my alert right there right now, and if that happens, I think it might happen, guys. This could be straight back to 80 plus bucks in no time, as crude oil looks very good. The chart looks pretty good right now. It's continuing the uptrend and went up 9% on the day, back over 100 bucks a barrel. So this looks like it was just a pullback, 30% pullback, very big pullback, but it was a pullback nonetheless. And buyers are stepping in, and it looks like oil is just not done yet. So for that reason, I'm watching CL, which is crude oil, the futures, right? I'm watching XLE. I'm watching Occidental Petroleum, CVX. These are a bunch that I think could end up running even more. Exxon's chart looks pretty decent to me on this pullback. It's down about 13 bucks, down about 15% from the recent high. So that's pretty much it, guys. I hope you all enjoyed the video. If you did, hit the like button, drop me a comment, let me know your thoughts, subscribe. And yeah, what do you think about these markets? Very freaking crazy times we're living in. Again, drop me a comment, let me know your thoughts. Join my Patreon if you guys want all my real-time buys, sells, call-outs, morning videos, plus more. And don't forget to get your free money from Moomoo. I'm telling you guys, it's free money. Use that link down below, deposit at least 100 bucks, which then you can take that money out, hence why it's free money, and you get one free share of NEO guaranteed, and up to 5 other stocks, each of which could be valued up to 3,500 bucks. Again, use that link, deposit at least 100 bucks, and boom, you get some free money. I'll catch you all in the next video. Peace out.